Welcome to the FinTech Faceoff. My name is Jennifer Grazel, and I lead global marketing for our services enterprise business here at LinkedIn. The future of finance is already here, but clarity remains elusive. The flare-up and flame-up of FinTech unicorns, the race of incumbents to innovate while challengers scale, the shadow of big tech behemoths, and the portent of Chinese platforms. In many debates, they discuss these topics. However, many events are too formulaic, and they don't get at the heart of the matter. Thus, we conceived an event with a difference, the FinTech Faceoff, a collaboration between Capgemini, LinkedIn, and 11FS. In this transatlantic tussle, we have teams both in America and Europe who are going to flex their FinTech muscle. They'll compete discussing the future of finance. And you viewers have a role too. So grab your seats, share your views, and crown the winner. Moderating live from New York is CBS News business analyst Jill Schlesinger. Over to you, Jill.
Thanks so much. So my role here today is to be a really good traffic cop. And we have a Bobby over in London for the European side. Her name is Sarah Kachansky. So the two of us are going to moderate this live event. Want to thank everybody at LinkedIn, Capgemini, and 11FS for helping to pull this off. An amazing effort. So the first job here is to actually introduce you to our team. Team America's co-captains, Shankar Krishnan, partner Capgemini. Sam Mall, managing partner 11FS. And our Team America debaters, starting with Bo Hartman, the CIO at Goldman Sachs Bank and the CTO of Marcus. Clara Shai, CEO, co-founder, Hearsay. Dan Egan, Director, Behavioral Finance and Investing at Betterment. Jane Barrett, CEO and co-founder, Goldbean, and author of Personal Finance and Investing Courses on LinkedIn Learning. Jeff McMillan is the Chief Analytics and Data Officer at Morgan Stanley. Catherine Petralia is the President and co-founder of Kabbage. And Zach Gibson is the Chief Innovation Officer at USAA. Now, we also have a robust social team, both here in the Americas as well as for Europe. If you want to join the conversation, use the hashtag WFTR18. Your social team, captained by first, Jim Maru, co-publisher, The Financial Brand. Theodora Lau, Director of Marketing and Innovation at AARP. Sebastian Mounier, Director, Chapuis, Halder & Co. April Rudin, Founder and CEO, The Rudin Group. Bradley Leamer, Managing Director, Head of FinTech Strategy at Explorer Advisory and Capital. Anna Herrera, FinTech Correspondent at Reuters. Ron Shevlin, Director of Research, Cornerstone Advisors. Penny Crossman, Editor-at-Large, Source Media. And Dan Lattimore, Senior Vice President of Banking at Celent. And now over to Sarah Kachansky, who will introduce the European team.
Thank you so much, Jill. So I'd like to start by introducing our co-captains over here in Europe. First up, we have Elias Garnham, Head of FinTech at Capgemini. Second, we have Simon Taylor, who is a co-founder at 11FS. We also have an excellent debating team with us here today. We have Claire Calmier, who is Transformation Director at Lloyds Banking. Jamie Campbell, Head of Awareness at Bud. Suresh Ramamurthy, who's the Chairman at CSW Bank. Nectarios Liolios, who's the CEO at Startupbootcamp FinTech. Richard Davies, in charge of SME banking at TSB. And Simon Vans Kalina, an engineer at Monzo. We also have an amazing social team over here in Europe. They're headed up by Spiros Megaris, who's a VC and advisor at Megaris Advisory, Andreas Straub, managing partner at Fair Advice and Partners AG, Simon Cocking, the editor-in-chief at Crypto Coin News, Gayla Boscovich, head of FinTech and RegTech partnerships at Startupbootcamp, Sophia Cannon, broadcaster and socio-political commentator, and Maria Deem, Vice Consul, Financial Services at the British Consulate General, New York. And now we're going to go back to Jill, who's going to give us some more insight in how today is going to work, some housekeeping rules, and more details on the all-important voting element of today's event.
Thank you so much. So we've all been to conferences, and I know you've sat in these and you've thought to yourself, is this the same stuff over and over again? Well, this is going to break the mold. We're going to cover some topics that have been in the conversation, but not in this format. We're hoping to break new ground with a lively, engaging, and illuminating debate. And I want to be sure that everybody understands that much of this debate was based on a fantastic report, which you can get, the Capgemini LinkedIn World FinTech Report for 2018. You should check that out. Using that, we've divided the event into two main sections. The first hour will be financial services, customer trust, and journey. The second hour, collaboration models between fintechs and traditional financial services firms. Now, each of these two main topics has 5 specific questions, so it's going to move along very quickly. In case someone goes too long, not that that would ever happen with any of the fabulous panelists on either side of the Atlantic, but just in case, we're going to have a timer. We're also going to have a buzzer if they go too long. It's kind of like a high-stakes chess match meets a frenetic game show. Our modified format for a debate will be as follows. For each question, both teams will start by laying out their opening positions. Each team will then have the opportunity to go first. The Americas will kick off the odd numbers. The European team will open the even numbers. At the conclusion of the opening positions from both teams, each team will then have a rebuttal period. Then one of the team captains will sum up the round, and you then have to do a little bit of work. It's time for you to vote. And the way that you vote is you go to Twitter and you will follow the instructions at the bottom of your screen. There'll be specific hashtags to use. Sarah and I will each announce the results of the rounds at the end of the subsequent round. Are you ready? Because it is going to be a very bumpy ride. Let's go. Okay, here we go. The first section, customer trust and journey. And what we know now is that expectations for convenience and personalization are driving firms to quickly adjust to meet customer needs. The companies that deliver personalized, relevant, and seamless solutions will be among the winners. Our first question, what are the most overhyped and underwhelming emerging technologies in financial services today? Which technology actually has the most realistic chance of redefining the banking experience? We are going to turn to Catherine for the opening position for the Americas.
Thank you. The Social Security Administration was founded in 1935 as a social insurance program to pay retired workers. In 1946, the administration added the words not to be used for identification to the card because even 80 years ago, they knew better than that. Absent any other way to identify consumers for everything from financial transactions to healthcare services to employment, the Social Security number quickly became the only way to confirm a consumer's identity. This scheme, as we all know, is seriously flawed. A quick Google search for KYC solutions yields page after pages of ads and results for all kinds of services claiming to solve any company's identity verification woes. By the way, if anyone from Hearsay Systems is listening, I think you're spending a little too much money on AdWords. Take a quick walk through any FinTech conference, and you'll see booth after booth of identity verification startups. Identity management solutions are the most overhyped and underwhelming emerging technologies today. How many of you are disappointed I didn't go with Bitcoin on this? Old and new companies alike seek to fix our broken national system of identity verification. They can't do it, but it's not their fault. Increased regulation around identity management after 9/11 was very well intentioned, and the regulation continues to flow from FinCEN as we attempt to curtail money laundering and terrorism financing. We all want this, not just for AML KYC purposes, but for everything. Every day reveals yet another story of a hacked system, company, or election. Our national security depends on solving this problem, and some of our best and brightest technology minds have their hearts set on solving it. But until our governments adopt a national identity management strategy, one centered around something other than an easily guessed, purchased, or stolen 9-digit ID, the problem simply can't be solved. Many countries around the world have tackled this issue with technology, including densely populated countries like Indonesia and India. Social Security numbers were never intended to be used to broadly verify identity, and it's clear that our continued use of them puts our identities and our democracies at risk. The only solution that will work is a willing coalition of public and private organizations that work together on this issue. Until then, every tech company that claims to have the identity management crisis solved is just biding their time until the next breach. Thank you.
All right. Fantastic, Catherine. Thank you so much. And now we will have the opening position for the European team. Suresh, lay it out for us.
Okay, so the overhyped technology is obvious. Blockchain in its 5th or 6th year, it's like a hammer looking for a nail, and it's found a whole bunch of nails that are holding some odd things together. So I would look at, from a banking perspective, blockchain as is extremely overhyped. It's unlikely to, it's likely to come back in a different way, but as it is, it's meant for a decentralized banking system, not for a centralized regulated banking system. In terms of underwhelming technologies, I start to lean more towards Catherine, but more towards what I think is a preventative compliance regime in banking. Because end of the day, the biggest, what you call block in a bank, the thing that slows everything down is compliance. And in a digital world, if the number of transactions we're going to do goes through an order of magnitude of 1 or 2 or 3, even 3 zeros, what's slowing us down is going to completely gridlock banking, and you cannot do whatever you need to do, whether it's simple payment. So it's how you do preventative compliance, how you re-engineer banking is not talked about as much as the front-facing, consumer-facing, or blockchain type, the hyped word. So I would say preventative compliance, and one of the key things that you need for preventative compliance is a digital identity, which Catherine talked about, because I would say more than half of the problems comes from trying to build a profile against, or trying to build a unique profile against a human being or an entity, and you don't have a public good like you have in India or in some other countries where digital identity is a public good, whereas in the US it's what is a reasonable effort of a banker to find out what your identity is, and which can be completely disagreed with by regulators. So you have absolute opacity on how you actually manage identity verification in one of the most developed countries. There are other countries that have figured this out, like Mexico, where you're going to soon have digital identity, I believe. But I think that is very underwhelming, but it's actually one of the inputs into compliance is digital identity, and that today to me is very underwhelming, and I think that needs to be looked at. So.
All right. Well, now, this is quite interesting because we have two different views of this. Catherine lays out the identity management systems as underwhelming. Suresh, the blockchain, of course, we knew someone was going to bring that up. I also note with great laughter his idea around the compliance issues, since I am married to a compliance professional, and I was sort of hoping that would be like for the rest of my life, but maybe not. Now we've got first up for the U.S. team, we're going to have our rebuttal from Jeff. Jeff, take it away.
Thanks, Jill. So I would say the most overhyped technology is AI, and the one that has most promise is AI. And I say that because we use this as such an amorphous blob of technology, and candidly, most people have no idea what they're actually talking about when we're talking about artificial intelligence. And there are aspects about artificial intelligence, anomaly detection, identification of opportunities, next best action, that are really powerful and can drive your business forward. And then you sort of drift into this sort of sentient being space, and we are so far away from those things. We've done a lot of testing ourselves, and our jobs are safe for a while, particularly in the high-end world. And what we have found is that we have to stop making this conversation about who is smarter, myself or the machine, and start talking about how we make ourselves better at what we do using the technology that's available. Lots of players in this space are sort of chasing after bots, and I met with a firm the other day who shall remain nameless, who basically said, listen, I can create a bot for you in 10 minutes if you give me a bunch of questions and answers. You can create a really bad bot in 10 minutes with a lot of technology today. It takes months and even years to actually do it the right way. The second thing I'll say, the second most powerful thing you have in your organization is actually not a piece of technology. It's leadership and it's culture. And we spend so much time talking about the next new cool widget that's sort of coming down the line that's going to take us to the next century. And the reality is the reason you will fail has nothing to do with the fact that there is not a vendor solution in the marketplace that can solve your problem. The reason you will fail is because you could not align your business objectives and your organizational structure to embrace these new technologies in a way that actually grow your business and move the needle forward. Thanks, Jill.
Oh, wait. Oh, man. That was good.
I don't know this man that well, just so you know. That was good.
Okay, we are now going to go to the European rebuttal, and Claire will lay out that argument.
I think it's interesting we are talking since the beginning about technology when we define the customer experience. For me, it's really the customer that is defining this experience, and we have not talked about it for the last 5 minutes or 6 minutes. Customers are setting the bar. This is why FinTech sets the bar. In terms of offering new solutions. This is what we aspire to offer the same type of experience. It's really about the customer. Then I will totally agree with some of the comments that were made around, the alignment, the execution of the technology. But I think the second part we didn't really discuss is, the underlying data. Because for me, digital identity is just a way and a mean to access to banking services. And blockchain is just a container that will store very securely distributed data. And to some extent, a chatbot is just, or AI is just a manipulation of this data. Really, data is the underlying, not technology, but the underlying asset that will make change and redefine the banking experience on the future. The ability of organization to have highly personalized experience that they deliver to the customer is a trend we are seeing clearly in the industry. So for me, it's not about digital identity, it's not about blockchain, it's not about AI, it's not about chatbot, it's about customer and data.
Okay, so at the end of each round, we've got a team captain who will kind of provide a nice, tidy summation for you. Sam, give us a summation of round one.
So actually, first I got to say this because my wife keeps texting me. I know my socks don't match, all right? And it's Eli's fault. He did the laundry. I swear to God, the kid has no attention span and it's driving me crazy. Y'all will see that in a minute. What's the most overhyped technology? Frickin' everything. Seriously, if there's an industry that can overhype, we're it, right? We push AI like crazy, blockchain like crazy. We talk about big data. We overhype everything. What about the most underwhelming? Everything. Okay. Honestly, thank you, Elon Musk, for launching a car into space. That was pretty cool. I like that. But I like what Bill Gates says. He's smarter than me. I think everybody knows this quote. We always overestimate the change that will occur in the next 2 years and underestimate the change that will occur in the next 10. Don't let yourself be lulled into inaction. Ooh, I got that in. Proud of it.
Okay, now it is your turn to do something yourselves as you watch this wonderful debate. Go on to Twitter and start your voting process. You will see there are 2 different hashtags, one for the Americas, one for the European team, and you will now be able to vote. We will announce the winner of this first round in our next round. And for that next round, I am going to Sarah, who will start in with round 2.
Thank you so much, Jill. What an exciting start. We've already hit blockchain, AI, and compliance, and we're only 20 minutes in. So we're going to continue that trend and move on to a subject dear to many of those in the fintech industry's hearts, data, and specifically how firms can extract maximum value from it. So our second question is, how are companies leveraging data to understand customer needs, improve trust, and drive engagement and loyalty? A reminder that our panelists can use examples from other industries if they like on this one. And we're going to go straight over to Jamie, who's going to give us the opening position for the EU.
Well, before we get started talking about data in the EU, we really have to mention GDPR. We mentioned earlier around how customers and companies are helping customers trust the companies that they use. And GDPR is one of those initiatives which has been led by the EU and pioneered across the world, as a real standpoint about putting trust and power back in the customer's hands. So I think that's one that we definitely need to get out of the way first. In terms of how companies are helping customers achieve more with their data, really, when we're talking about financial services, we're talking about unlocking hidden meaning in transactional data. Companies such as Bud, we're helping small businesses go through the onboarding processes of applying for small business loans. We're partnering with a company like iWalker to pre-fill forms and make sure that companies can go through those processes as quickly as possible. Because let's face it, if you're a small business, you don't want to spend all your time filling out forms. Equally, on the consumer side, going deeper into how your spending is, what it's saying about your life. So really joining the dots between your spending and what that means for you. So if you're spending money and on an airport or in a traveling capacity, really providing the information back to customers on exchange rates, really being proactive with how data is being used and connecting people to those high pieces of information. All those notes that you write, they really go out of your head instantly.
Thank you so much, gents. Right. Thank you very much. And now we're going to go back to Clara, who's going to give us the US's opening position.
So everyone's talking about data, but it's really not about data. It's about insights and what you do with the data and insights. It's interesting to talk about how data can be used to drive engagement and trust when you need to have engagement and trust in the first place to be able to get the data from consumers in the first place. So let's talk about digital direct and digital advised. Digital direct, highly transactional. We know it's a race to the bottom. There's a lot of data, so the volume of data is there. But the quality of data, some of the most rich interactions happen with advisors. And this is true both for commercial clients as well as high net worth individuals, that firms' most valuable clients generally have some sort of advisor because those clients demand concierge services. And with digital, with data, with automation, we can help scale those concierge services down the chain, which is why we see everyone from established firms to Schwab and Vanguard to even FinTech firms like Betterment now actually having human advisors in that hybrid model. So we know the big unlock is really the advisors. What's happening right now is a black box, frankly. And so how are firms solving this? Almost every firm that we talk to at Hearsay, they are either considering or have already deployed some sort of CRM system. Multi-millions of dollars to deploy, many years to get settled. So they put it out there, and then what happens? Nothing. Because advisors, like any of us, don't like to do manual data entry. So they stand up these fancy CRM systems, and advisors don't, after they have a great meeting with a prospect or client, the first thing that they do isn't to run back to their computer and enter all of their notes into CRM. It's just not realistic. And so these CRM systems stand pretty empty, and there ends up being this huge divide between what's happening at corporate and what's happening with digital direct, all of this data, high volume, disconnected with what's happening in the field. That therein lies our biggest opportunity. Both in Europe as well as in the US, compliance can actually be our friend when it comes to data. The books and records requirement, where we have to capture and supervise everything that happens, from calls to text messages to social media to email, that is actually, it is a burden to capture, but it's actually an advantage when you're thinking about collecting data in structured ways. Thank you.
Thank you so much, Clara. So really interesting opening positions there. We managed to hit GDPR. That's 4 out of 4. We were talking about compliance more broadly. Again, how it can help with these data questions and indeed the democratization of services. So a reminder to our audience that if you like what you heard, you can head over to Twitter to vote on who you think had the best position there. And whilst you're doing that, we're going to go over to Suresh, who's going to deliver the rebuttal for the European team.
So data. banking has bad data. It doesn't have good data. That's at least my learning so far. Because end of the day, banking is in the business of commerce enabling consumers and businesses, which means they're doing something else to do a commercial transaction. And our role in banking is to enable that, or to even understand what they need at the right time and provide the ability to do a value transfer or provide a loan or liquidity gap, meet a liquidity gap. So what we found is as banking is evolving, the data from the past, historical data is very bad because there was memory constrained, bad machine, smaller machines, and you don't have the contextual data that you need to do what this end is AI. We can't even get to AI. We have to get to machine learning. To get to machine learning, we don't even have good data to learn in a very organized, structured way. So what you hear about AI is people collecting forms and things, and the front end you can do some amount of social media engagement and mobile app engagement. So what we have found is you're going to have an order of magnitude of data per transaction that you didn't have 5-6 years ago. So that's going to allow you to do some things incrementally, but not in a dramatically improved fashion. It's going to drive some amount of engagement. We're going to see some changes in bill pay. Maybe it's going to anticipate your amount of bill you're going to pay and maybe even offer a loan. It's going to do the same thing in terms of wealth management, but it's not going to be what you see in some of the ads or thing where some computer voice talks to you and tells you, you should be buying this stock, selling that stock. That's not going to happen. It's still going to be human-led, human being led. So from my perspective, yes, there is going to be a data-assisted engagement models throughout banking. And there are certain areas where banking can collect really good data, do really good machine learning. That would lead to more, let's say, faster tools for helping customers to make decisions faster through endpoint devices, which could be a Google Home, Alexa, or could even be a smartphone. So I will leave it at that. So.
Thanks, Suresh. Okay, so it's over to Dan for the US's rebuttal.
That's a very sunny outlook, Suresh. Wow. So it's not going to get better and it's too hard. So I think one thing that we touched on that is very important is that you need high quality data. And the way that you do that is you invest in systems to generate high quality data. One of the things that we do a lot of is many iterative small experiments. So you don't need big data, you need the right size data to answer the questions so that you can change the product that the customer sees, how they experience it. We've been able to do this in a number of ways to help clients make better decisions, like maybe they shouldn't sell that stock or maybe they shouldn't change their allocation. That involves also owning enough of the data through the entire pipeline so that you're not relying on third parties who can't do what you need them to do. Betterment has a feature called Tax Impact Preview that before a client goes through with a transaction, we are actually able to estimate the tax impact and tell them whether or not we think it's a good idea for them to go through with that based on the taxes they're going to incur. So I think that the customer experience and how your systems, the infrastructure that you invest in, so that the product changes, the service changes over time because of the personal experience that each client has is incredibly important. And the investment that you need to do, this is the big difference. It's not a matter of generating data, it's a matter of taking that data and iteratively changing the product that the customer experiences. I'm going to end on one sort of strange question. Is the UK still part of the EU?
Oh, wow.
Nice one.
There's some smackdown there, Sarah.
Too early?
Well, the correct the answer is that yes, it is for now. We're going to turn it over to Elias, who's going to give us a quick summary on his thoughts from that first round.
So technically, yes, UK is part of the EU as we speak. So I think, what are the messages first? GDPR is big time changing the way we engage. Concierge, having the right data available, having more smart data, be able to get the right information. I love the example of saying, well, salespeople don't run to the CRM, so we need to help them get there. But for me also, the most important part, what my colleague was trying to say also is PSD2. In Europe, what we are doing here is also now enabling everybody to have access to the data. And by having access to the data, now we can get smarter decisions. I think the example that Suresh gave about Alexa, now I will be able to engage with Alexa not only for basic stuff, but maybe for more complex stuff. Based on my behavior, based on my spending, based on my family, Alexa could get me.
Thank you, guys. Thank you, everyone, in fact. And now we're going to go back to Jill, who's going to let us know which team won round one and summarize how you can vote on the round you've just seen. Over to you, Jill.
Okay, thank you so much, Sarah. Okay, round one. The winner is Americas.
Oh, where's Simon at?
Okay, now remember, if you would like to vote in this round that we've just completed, round two is really quite vibrant, I must say. Just go to Twitter and follow the hashtags down at the bottom of your screen. You could vote for either the Americas or for the European teams. And don't forget to weigh in and comment, hashtag WFTR18. And now it is on to round three. Okay, so we know that driving insights through data is key for this personalized experience we've just talked about. Big data, small data, incremental data, whichever way you want to do it. But here's the question. All the companies have the data, they have technology. How are they going to get there? Here is your question number 3. How can banks meet rising expectations while saddled with legacy systems? Are APIs and open banking the final answer, or simply a stopgap solution? For the Americas, the opening position will be delivered by Bo.
So first off, I want to say, Simon, haven't seen you in a while. That's a beautiful jumper. Thank you for wearing it, my friend. So the question has a lot to unpack. The first part about it is, can these legacy companies overcome the debts that they have? And we talked about technical debt, which we'll get to. But what's more important, there are 3 major debts inside of these legacy firms that they have to overcome. First one is product or process debt. Second one is organizational debt. And third one is technical debt, which we'll tag at the very end of this. The first part is there's a lot of products and processes that the firms really have a hard time going after. It's difficult to retire a product. It's very hard to change a process inside of an ingrained organization. The second one is organizational debt. Organizational debt is challenging. That's a cultural move. You have to move hearts and minds. And when you have large organizations, they create something that I like to refer to as the immune system. And the immune system is there to protect it for compliance reasons, regulatory reasons, or just the fact that we've always done it that way. And to tackle that one, companies put a lot of effort into it, but it's very hard to move the massive needle. Without moving those 2 pieces, actually moving the third debt is very challenging, technical debt. But we like to focus on it because of all the overhyped things that my colleagues talked about earlier. And it's also the big ticket item in the budgets. CEOs and CFOs look at that line item and then they say, hey, what if I cut a third of that out? Look at all the things I would save through automation. But if you don't tackle those first 2, automation can only make it so far. Before I get to the API and open banking question, because everyone likes to jump to the solution, I'm going to talk about how we tackled it at Marcus by Goldman Sachs. Those 3 debts that I talked about actually were very, very impactful to my thinking before I joined Marcus by Goldman Sachs. I lived my career in major companies that were partially good at tackling those things or failed completely at tackling those things. And the ideas that I generated in those times of running those platforms is that, yes, I can put a new automation system in, or yes, I could always put a CRM system in. But at the end of the day, if I don't move those things, then I'm just really pretty much putting a veneer over other areas. Technology in these large organizations are ganglion cysts that stretch out everywhere. The last part that I'd like to say on the APIs and open banking really quickly is there are good frameworks, and they're just frameworks. There's something that's going to come out after that, and we as technologists just have to be one step ahead in making sure that we're doing it.
Okay, thank you. And now, over the pond to the opening position for Europe. Suresh, you're up.
So I kind of agree with him, but I have a different take on this, having gone through a transformation. There are 4 things which I've learned in the last 5 years on this. One is banking as it is, or legacy banks are transactional systems. So you have like even in a small bank, when we bought one, we had like 20 plus transactional systems, and I'm assuming a large bank has thousands of unique transaction systems. So banking is a process business. Running on a siloed transaction system and organizational structure is kind of built around these transaction systems. You have a head of cards, head of debit, head of this, head of that. Whereas really, a card is a token for accessing money from a number in a database. So we had to rethink banking as a process. And if you really do that, banking comes down to less than 50 processes end-to-end, with including embedding compliance in it, right? So that is the first thing you have to do is to do an organizational transformation. You got to figure out what your processes look like, without which you don't know which way to redo the org, right? The next thing we looked at was there is a lot of cost centers that are built around and what we call third-party vendor transaction systems that really prevent you from offering solutions that really would meet the consumer needs, but the cost structure of multiple transaction systems don't enable you to do that. It could be bill pay, it could be card issuance. So we redid all of that. So we moved a lot of cost centers to profit centers. And one of the things that the issues in banking is settlement and reconciliation is not talked about much, but it's the single biggest headache in banking, because you could spend $1,000 chasing a dollar in discrepancy. So we had to figure out how to do real-time settlement and reconciliation across all kinds of products. So you got to redefine how you do these flows in banking. So once you get to that, then you get to the third thing. Nothing moves in banking without real-time compliance. So the existing legacy compliance regime is post-transaction random sampling of a few transactions to test other than watchlist testing. That doesn't scale well, because you have, I'm sure all the big banks are building full of false positive watchers, people whose only job is to look at false positives and remove them or to put them into a case management. So we went to a real-time data analytics of every transaction that allows you to actually scale up with lower costs. If you do all this, you get to a different place. You get to where the bank is poorly addressable today to a tokenized bank account, becomes a smart account. So the bank account itself is going to evolve from a simple static ledger-based account to a tokenized.
All right. Well, so this is kind of fascinating because it looks like we're addressing the problem from two very specific standpoints. I think that when you think about those 3 different debts, the 4 different ways to rethink your banking, you've got a lot to contend with. If you think one of these 2 guys made a better argument, head on over to Twitter where you can vote. You just look at the hashtags on your screen and you can start voting now. Or you may want to wait till after the rebuttal period. So now let's go to our beautiful rebuttalist, Zach, for the Americas.
You're lovely. I've been called many things, but beautiful is not one of them. But I have been called a father, and so first and foremost, I'm a dad, but I'm a child of the 80s. And so I'm a child of the 80s, and I'm a parent of 2018. And so imagine a conversation I would have with my daughter, who's 6, and if I looked at her and said, honey, I'm sorry I can't parent you, because I'm a child of the 80s. I don't know how to be a parent because it's 2018. But I love her, and so what I've had to do is I've had to reboot my own internal operating system to be a parent of 2018, not a child of the 80s who's trying to be a parent of 1980. And so how are banks any different? Well, I love my daughter, but if you ask your bank, does your bank love you? Does your bank care for you? Does your bank want to see you achieve your goals? The answer in many cases is no. But the answer should be yes. And if the answer is yes, then the bank needs to figure out how. And having an excuse that legacy systems and operations and processes can't enable the bank to serve you is not acceptable. The answer has to be start somewhere. Start somewhere. Make it easy for your customers to do business with you. Make sure that their data is safe and secure. Help them pay down debt. Help them send their child to college. Those are things you could do today before you touch your core operating systems. So I would encourage you, bankers, and you, Europeans, think like a parent, love your kids, love your customers. Thank you.
That's great. And we're printing up T-shirts, Does Your Bank Heart You, any moment now. Okay, we are going to go over to Europe. Delivering the rebuttal for the European team is Simon.
Should I wait for the buzzer? No, I'll just start. My bank loves you, genuinely. We love our customers. I'm Simon, I'm an engineer, I work at Monzo. We built a bank from scratch in 3 years, so I feel a bit disingenuous talking about legacy because we haven't got any. But I have worked for big banks before. I've worked for banks where you'd work for 12 months to get one tiny little change that didn't even really affect the customers. When you say legacy, I like to divide the world into, not just legacy means there's stuff that you don't really understand that's old. I like to define the world by before Google and after Google. See, a few years ago, Google basically took the technology that powers their data centers. They took microservices and Kubernetes and a programming language called Golang, and they basically open sourced all that, and they put all that out in the world. And if you look around the top tech companies now, pretty much like all of the big ones are using the same tech stack. They're using microservices, they're using container management systems like Kubernetes, and they're using languages like Golang to basically build software where you can release things at the speed of thought. You know, you can write some code. Like I literally released a feature to our staging environment while I was waiting for this thing to start. It's not good enough anymore to say like, oh, we're managing down our legacy, we're managing down our technical debt. No, if you're a company that has been born after this sort of like step change in the way IT is done, then you're never going to catch up. When we were building Monzo from scratch, we started 3 years ago, we talked to a lot of people about like what even is a core banking system, and no one could really tell us, like, is it a series of credits and debits that sum to zero, or does it include the card processing, or do you have to have an end of day batch? Like, what are we even talking about? And in the end, we decided that we would just have one system, like one giant system. It doesn't have an API, it is an API. It uses HTTP all the way from the customers all the way through to our core backend systems. It's just one giant API. So there's no legacy systems to manage. So I don't really know what the answer is. Are APIs the final solution or a stopgap? I don't know. I think that APIs are going to change banking. They're going to change the world forever. They're going to make customers' data available to customers in a way that they want to use that data. Whether or not we move to a post-API world where we use smart contracts, like that might be the future. But for now, APIs are such a big thing. Like, don't try to look past them. Just embrace them. And build a new core banking system. It's not that hard. We built the whole bank in 3 years.
Yeah. Wow, it's pretty tough, man. Okay, Shankar, you've got your work cut out for you. Give us a quick summary of this third round.
Absolutely. Glad to do that. Great conversation around the room today. I think sometimes banks, like smoking kills, need to have something which says legacy kills, because legacy comes in the way of smart ideas. Legacy comes in the way of good ideas. There is oftentimes a lot of business rules that the business folks want to take to the market, but legacy stifles. So the good news for us is that, Suresh is a good example of having created an API that works for payments. We see MuleSoft, Apigee, and folks like that build billion-dollar businesses backed on API. So I think API is a good short-term solution. What I see happening is that there's going to be a lot of APIs, public, private, and third party, that API management is going to be the next science. So legacy is a problem. API helps us for now. Long ways to go. Banks need to change, move into new systems, and be the APIs themselves, like Simon was saying. That would be my...
Thank you very much. Okay, so we now have our winner for round 2, going 2 for 2. It is America's once again for round 2. Don't get so high on your horse. Come on, there's a long way to go here. Remember that you can vote by going on to Twitter. Just look at those hashtags at the bottom of your screen, and you will be able to vote live at any time. And it's time to move on to our 4th question. And for that, we go over to Sarah, who will take over now.
Thank you, Jill. Well, that was exciting and indeed emotional, I would say. Come on, guys, we've got some work cut out for us here. Let's see if we can win the next round here, which is on a subject matter that has sparked debate across the financial services sector and indeed far beyond. We're talking blockchain. Is it the cure to all firms' inefficiency woes, or is it an overhyped technology that's never going to take off? We're going to start off with Simon, who's going to give us his opening position on the question, which is, what does blockchain hold for future in financial services?
Thanks a lot, Sarah. Oh man, like getting up here and defending blockchain in front of a bunch of cynical people is it's a tough gig, but I'm going to give it a go. So the killer use case for blockchain exists. It's cryptocurrency. There's like hundreds of billions of dollars of value locked up in the public blockchains, the 2 biggest being the Ethereum and Bitcoin blockchains. But the use case that really excites me more than the sort of self-issuing cryptocurrencies is the idea that commercial banks and central banks could actually issue cryptocurrencies. I'm not suggesting the Bank of England does an ICO, by the way, before we get down there. But 3 years ago, we started Monzo, and 2 years ago, I worked on the project to get us connected to the faster payment scheme. And the way that actually worked was we had to actually physically plug fiber optic cables, the other end of which was at the clearing system, into our data center, which was really hard because we were in the cloud, but we managed it. And then we had to write esoteric software to speak like really, really old school protocols to actually talk to the central infrastructure. And I kept thinking the whole time, like, this would be so much easier if there was just the trust in cryptography, if there was just a smart contract out there where we could take the amount of value we're attempting to send from one bank to another, like as a centrally bank issued cryptocurrency, and send it to a smart contract with instructions as to who the final recipient was, right? It would have saved us like a year of hard work. So as an engineer, like for me, the technology, it seems novel and it seems very, very powerful. And I'm not really, I don't really think it's, I think once you've actually played around with it, it is credible. It's not just pure hype. Blockchain's been around for 10 years now, and a lot of engineers think it's good technology. It's going to require like multiple parties to be on both sides of every trade, right? So to get access to, like when you get access to faster payments in the UK, that's just a clearing system. Basically, you're just sending messages about who's going to receive the money and who's sending the money. But the actual settlement system, that actually happens at the central bank. So that happens at the Bank of England. And the old lady of Threadneedle Street doesn't work on the weekends, right? Like, so you basically, you only settle 3 or 4 times a day, and that puts counterparty risk out there as well. If the central banks were actually, brave enough to embrace blockchain and issue their commercial banks with sort of tokenized national currency, issue them with actual currency.
Thank you very much, Simon. So now it's over to Jane for the US's opening position.
Thanks, Simon, for that very well-rounded argument. I think anyone who's been in the fintech space a while, or frankly any technology space, to beware the prophets. And you know who I'm talking about, right? Every conference you go to, they have the solution for how everything is going to change. I've been in technology since the 90s, and every year is the year of something. It's the year of search, it's the year of social, it's the year of mobile, it's the year of e-commerce, and everything is going to change. But technology is additive. And one of the big issues with blockchain is, A, there was a lot of profits and a lot of money without really a whole lot of use cases coming quickly thereafter. And B, some of these profits were talking a lot of theory, right? Show me the money, show me where it actually goes. So in wealth specifically, I am an investment advisor in the wealth sector. There really hasn't been a killer application beyond crypto. Like, we have a database innovation, and that's what blockchain is. There's been a couple of exceptions in terms of innovation in wealth. I think T0 have done something really interesting in terms of the back end of trading. Blockchain Exchange, which is launching next month, should be a very interesting innovation. But beyond that, I think we can all admit that the innovation's been pretty limp. So I'm going to issue a challenge to the prophets, who may or may not come after me. If you were to decouple crypto from blockchain, all we have is a database innovation. Challenge 1. Challenge 2, what is the blockchain application that the humans of the world can get? Like, seriously, distributed ledger, can we have some better words, please? That like some actual human beings can say, this will make an impact on my life. It's solving a problem that is not currently being solved, however badly. Show me some exponential impact of blockchain application that can actually make a genuine impact on my life. Thank you. Oh. Yeah.
Great. Thank you very much, Jane. So, surely we've got a full house by now. We've got cryptocurrency and ICOs ticked off. We've also got one blockchain evangelist and several challenges issued. So let's see where we can get to when we get back to the rebuttals. But before we get there, a reminder to vote for who you think won on the opening positions there. Now, we're going to go over to Nectarios for the EU's rebuttal.
First of all, we've done jumpers, we've done socks. Can we please do sneakers? I'm not even sure who I'm rebutting here. But ultimately, who cares? Why are we having this conversation? We run accelerators, right? So we see, I don't know, hundreds of startups every year. About 25 to 33%, a quarter to a third of all applications that we get are somewhat blockchain related. And most of them shouldn't be. And most of them are really, really terrible propositions. But people get excited by the tech and they build something and go, maybe we should use conventional technology. At the same time, we have all this industry fora that generates so much noise. And we like to talk about noise because the reason we're doing this today is to get away from the noise, right? So why are we perpetuating the noise? If I were to bring in a bottle of a Heinz product and put blockchain on it, the blockchain on it would be like 58 varieties, but nobody ultimately cares. The other side to this is not that people don't care, but it's the impatience with it. This is new. This is new territory. This is completely new in the way we interact. It's new technology. It's different applications that we're still exploring. But people are so impatient, and it takes longer for somebody to be promoted within a bank that you actually see something like this happening to fruition. But people getting very frustrated. People are talking about, oh, it's not going to work. There's no need for it. Reality is we have the opportunity to use something that is fundamentally new, even if it's a new way of using databases, that we can actually use quite effectively if we do it right and if we give ourselves the time to explore. At the moment, we're in exploration stage, right? Why are people being so negative about the exploration? Why are people so desperate to figure out the details? Why are we talking about tech rather than talking about solutions that we're looking to find for problems and then find the right technology to apply to this? So it is frustrating. At the same time, it does something that nobody really addresses, but it has the potential to change the relationship and the ownership we have on data. So we're moving from a space, so we have the potential to move a space where somebody owns our data to us being able to control the data through this technology. And this is a very interesting angle, right? But it's not part of the debate. The debate is all about, show us the money. Well, maybe not yet, but give us some time, right? The debate is all about, well, there's all these kind of ICOs. What are they doing? Reality is, yeah, there's definitely companies who manage to raise millions and millions of money who shouldn't be able to do that. But give itself some time to breathe. Give it time to actually consolidate itself and establish itself, because otherwise we'll end up having the faster horse rather than having the car.
Thank you, Nectarius. So now we're going to head back to Dan for the US's rebuttal.
So my background is behavioral economics, right? So I don't know anything about cryptography or regulatory systems or distributed ledgers. I explicitly am not allowed near our databases because that would be horribly dangerous. So my view is mostly to answer the question about why people are negative about it, to think about humanity. Blockchain is basically short humanity. It is like saying, I don't believe in trust. I don't believe in society. I don't believe in, actually at some level, the environment. Do you know how incredibly inefficient these systems are in terms of the electricity that they consume? To do something that is, again, could you verify that the money is there and that we can move it and that we could keep track of that? So to answer the question about why it's so negative, blockchain is basically this entire expose of technical, complicated solution that doesn't serve anybody who really wants it. It is amazing how vapid the use cases are outside of cryptocurrencies, where we can get people selling arms and drugs and moving currencies around third world dictatorships. So I can see, I think it's Simon laughing there. Not in my words, but in the words of Matt Levine, who is a financial columnist at Bloomberg. I have a half-baked, three-quarters joking theory of cryptocurrency, which is that it is a magical incarnation of a sort of internet male grievance. People, mostly men, sit around on Reddit complaining that they are underappreciated geniuses and that it is unfair that they have not been rewarded with wealth. They expect that the modern world should reward computer literacy. And then they grow up to realize that the modern world, much like the old world, rewards mostly people who have creativity and emotional intelligence. And then Bitcoin came along. And the paranoid computer literate people who spent a lot of time on the internet were the early adopters and became the world's first economic system that allocates wealth basically for hanging around on Reddit.
Thank you very much, Dan. So over here we have Simon Taylor, who's going to give us what he thinks are the salient points on that subject matter.
I am not going to give you any salient points whatsoever. I am going to rant back at Dan. And I think primarily the term vapid was what stuck out to me right then. If you've heard of modern slavery, it's one of the most unfortunate things in humanity at the moment. People are manufacturing goods and services and not being paid for it. What the problem with modern slavery is it's very hard to prove what's happening and where goods came from. Large retailers don't know where their goods come from, even though throughout the process there is a certification and there is a completely well-known set of paper trails that happen throughout that. And even though each of those people has a mobile device, there is absolutely no single database that has all of world trade. Because what country do you put that in? Where do you centralize it? What old technology do you centralize around? So for a vapid use case, how about preventing modern slavery? How about preventing all kinds of horrors like that we see around the world? I think new technology can do amazing things, and I think blockchain is just getting started.
Thank you very much all. That was possibly one of the most passionate debates I've ever heard about blockchain. I'm now going to throw it back to Jill, who is going to give us the results for the voting on the previous round.
Well, round 3, the winner is Europe. So now we have rounds 1 and 2 going to the Americas, round 3 going to Europe. If you would like to vote, head over to Twitter, use the hashtags at the bottom of your screen, weigh in on this. It's very fun. And now I guess that we've sort of gotten a lot of stretching done. We've gotten our juices flowing. And that means it's time for the last question of this first section. And it is smackdown time. If you didn't think the blockchain was going to do it, here we go. Here is question 5. Americas or Europe? Which has been more successful in building trust and delivering customer experience? The opening position for the U.S., Bo, you are up.
So I was very lucky. I spent 4.5 years at Barclaycard, based out of London, England, and I was deeply immersed inside of the UK and European banking system. Years before that, I was with Capital One. I helped launch a business in France and helped shut that business down as well. So I had the experience of not doing digital banking very, very well. And then most of my career has been inside the United States in the banking organizations. I'll have to tell you, the best banking systems that I could see in the world right now are in Europe. And I know that so some of my colleagues in the United States might feel a little taken back about that. But the Europeans, specifically in the UK, have definitely taken the lead in that domain about opening up PSD 1 and 2. Most definitely opened up the doors for faster payments. The open banking standards have been driven out of there. The FinTech revolution, I argue, started in Europe. But before the Europeans get too excited about that, I would tell you that the one thing about the US that you can always tell is that we're a sleeping giant. And when we wake up, we're more than happy to borrow all the great ideas from around the globe to actually kick off and create innovation in and of itself. We're actually seeing that with, when I came to Marcus by Goldman Sachs, like I said earlier, a lot of the things that impacted my past career created the things that we're building today. So at Marcus, we started with building from our consumers in the middle and building out. We had 10,000 interviews. And in those interviews, we used the overlay of what are the things that you find most important to you. Being transparent, being clear, putting automation that was simple and easy. Instead of using 10s or 20 versions of your data, taking 5 simple elements and making a very quick decision. And all of those are actually leading to a better place of customer experience and engagement. Also, with our partnerships with the FinTechs, we're very happy to engage with FinTechs and make them part of our ecosystem to improve the experience overall. And so from my standpoint, why I believe the UK and the Europeans definitely have us out of the gate, I think over the long term, I think the Americans will actually come in and we'll actually be implementing the next version of innovation for the consumer and for the banking systems overall.
Well said. Okay, for the opening position in Europe, let's go to Simon, who will take over from here.
4 words: treat the customer fairly. That's it. It's that simple. The UK regulators, when we were thinking about starting Monzo, were really super clear. Like, all regulation basically boils down to don't break the law, but treat the customers fairly. And this has been the ethos of, I think, of the financial services market in the UK for the last few years now, ever since probably 2009. And You can see that coming through everything, like through GDPR, through PSD2, through giving customers access to their data. It's all about treating the customer fairly. But beyond that, I think there's something else. Like if you want to build trust with your customer, you have to never betray them. You have to never reorder their purchases so that you make the most amount of overdrafts. Or you have to not send them letters saying that you're going to, charge them for an unauthorized overdraft fee after you've already charged them the unauthorized overdraft fee. You have to not charge them $30 for a £1 being overdrawn. You have to basically, it's so counter to the way banks have been run for so long, the way banks here used to be run. So I think like at Monzo, we basically decided to be really, really transparent about everything from the early days. And the feedback from customers has been incredible. Like people just love us. They are obsessed with Monzo, with the color of the cards, with it's like, apparently it's a dating line now. It's like, have you got Monzo? And like all that comes back to basically treating the customers fairly and being transparent. And so, yeah, that's it, basically. Treat the customer fairly.
Okay, 4 words: treat that customer fairly, be transparent. And will that U.S. sleeping giant catch up? You may want to vote on that right now. If you do, head over to Twitter, hashtags at the bottom, and feel free to weigh in on this argument, hashtag WFTR18. Now, for our rebuttal here in the U.S., Miss Clara, tell us what we need to know.
2 words. 2 words, free market. The customer will go where they're treated fairly. Venmo, PayPal, where did all these companies start? The US will win in the long term because FinTech is driven by tech. And tech is, we lead tech in the US. And the fact that we have this scale means that, as you heard from my partner Bo earlier, that all of the best ideas that we see in Europe, in Asia, Latin America, all around the world, we will fold into the behemoth that is Silicon Valley in tech and everything America.
That's it.
It's brilliant.
Drop the mic.
That was good. Okay, let's see. We've got a European rebuttal. I believe that would be Simon who's up.
Yeah. Different Simon this time. And I get 2.5 minutes to speak. Yay, Sam, shout out about your socks. They're amazing, and I'm sure they were ethically sourced, so I'm sure they came from some sort of blockchain. All right, so the interesting thing about a free market and a big market is it's a big country with very different cultures. Americas are a very big place, but especially North America, you have the West Coast and the East Coast. You have policy on one side and tech on the other side, and you have 5 levels of federal regulation. Each state needs to get regulated. Getting anything done costs a lot of money and is extremely hard. Now, there are good initiatives like Lab CFTC and similar initiatives from the OCC that are coming out that will mean the US will improve. But I think if Europe has an advantage, and especially the UK, it's policy. The ability to have 3 of the world's top 10 universities within an hour's drive of London. You've got all of the policy-making decisions right there in London, and you've got the tech center of Europe right there in London, and you've got Berlin just down the road, and many of the great tech centers in the Nordics. We have a burgeoning ability to grow a new set of businesses. And I think the question was always, will Europe develop the unicorns? Will it develop the decacorns? Will it develop the really big companies? And it was definitely behind the US, where you had capital that had been investing for some time in pure tech plays. So we saw Stripe and we saw Square, and we've seen those companies do well in a very large home market. But now we're seeing the companies in the UK that have been around for a few years, especially the challenger banks, not neobanks, not an app on top of somebody else's banking license, but an entirely new bank start to reach scale. Starling, Monzo, Atom, Oak North. These organizations are starting to really grow. And this is what excites me about Europe, is really a lot of the policy around general data protection regulation that Jamie mentioned, around PSD2 and open banking, is about creating a market in which fintechs can play and can succeed for consumers. And it's about not doing that into a draconian way, it's about treating customers fairly. And I think principles-based regulation is actually a lot easier to deal with. It's nice to call the USA a free market, but the reality is when you've got 50 different state regulators, it's a very expensive market. All right, that's me.
Well said. Okay, we're going to have a summation of this final round in our first section. And just remember, right after this, we will have a break. So just remember that. Okay, Sam, would you like to summarize this wonderful smackdown?
I think we all just came across as pompous asses. We didn't talk about China.
That's true.
We didn't talk about Africa. I mean, God, come on. I mean, honestly, right? Well, let's look at what happened. What's happened in China with mobile, right? And cash. Ridiculous, the take-up that's happened there. At the end of the day, it doesn't matter what we think. It matters what customers think, right? Marcus, wherever you're at, Bo, I think you're doing fine, right? Betterment, you're doing fine. Monzo, love you, Simon. By the way, 500,000 customers, I believe. Startupbootcamp, well done. Again, it doesn't matter jack what we think. It matters if customers sign up and use it. That's the bottom line. They're going to tell us who wins. And in China, by the way, they're kicking our ass.
All right. Okay, guys, this is very exciting because we have the round 4 winner, and the winner of round 4 is Europe. So we are tied up, even Steven, 2-2 right now. And we're going to break now for just a quick 10-minute break. While we are on break, feel free to join the conversation on Twitter about this wonderful debate. It's hashtag WFTR18. When we return, our next section will be exploring collaboration models between fintechs and traditional service firms. And that will begin in just about 10 minutes. So thank you very much. And we're going to take a quick break here and get right back into it.
As financial services customers order books, food, and travel with a few simple clicks, they now expect no less from their financial services providers. Fintechs have been enabling new technologies for FS customers, and their profound effect on the industry cannot be underestimated. While fintechs continue to lead the way in transforming the customer journey, the revolution that painted them as competitors is fizzling, as these agile startups realize the struggle of competing alone. The World FinTech Report 2018 from Capgemini and LinkedIn in collaboration with EFMA explores the path forward for fintechs and traditional FS players. It is paved with mutually beneficial collaboration as they adapt and simultaneously brace themselves for the expected big tech expansion into financial services. Both fintechs and traditional firms bring different strengths. Fintechs have achieved their industry foothold by filling gaps left open by bringing innovation to the customer journey. More than 90% of fintechs say that agility and enhanced customer experience are their key competitive advantages, which they say incumbents lack. Incumbents hold customer trust and strong brands, which are the new industry battlegrounds. Traditional firms also bring risk management, regulatory expertise, quick scalability, and financially viable business models, which are elusive to most fintechs. It's becoming obvious that the best way forward is to combine the strengths of fintechs and incumbents through forming symbiotic relationships to meet customers' growing expectations. These collaborations must align with customer goals, build trust, and deliver digital, agile, and efficient processes such as higher personalization, improved convenience, increased speed of service, intuitive interaction, better functionality, and proactive insights. The use of advanced analytics, predictive modeling, and other innovative technologies is also necessary to create offerings that make customers want to return. Successful collaboration will depend on selecting the best partner and engagement model, but a barrier to achieving this has been incumbents' perceived unwillingness and lack of agility, according to a majority of fintech executives. Incumbents' concerns involve a potential negative impact on trust, brand, and internal culture, as well as IT compatibility. One way to encourage successful collaboration is for fintechs to participate in Capgemini's Scale-Up Certification Program, a 360-degree review to qualify the most prepared scale-ups for effective collaboration with financial institutions. It will be important for these symbiotic relationships to take hold soon. Before long, big techs such as Amazon, Google, Apple, and Alibaba will be looking to expand their footprint into the industry. Google, Apple, and Amazon have already expanded into the payment space, and Alibaba and its subsidiaries is already ahead of the curve, collaborating with a number of traditional players. Other big techs will soon follow. To learn more, download the report at fintechworldreport.com or contact us at financialservices@capgemini.com or jgrazel@linkedin.com.
Welcome back. So I hope everyone is refreshed and raring to go. So we're now going to move on to our second set of questions, all of which will address the topic of collaboration models between fintechs and traditional financial services firms. Our first question in this section is one that's sure to be right up the European team's street. How are challenger banks making their mark right now? And we're going to go straight over to Richard for the European team's opening position on this one.
Great, thanks, Sarah. So I guess you've got to start with what is a challenger bank. So you've got three types to my mind. You've got the branch and digital banks like Metro Bank in the UK or TSB, my own bank. You've got the digital-only banks. We've heard from Simon from Monzo, had mentioned of Starling as well. And then you've got the front-end banks, the neobanks that are sitting on top of other banks, or with open banking, I think we'll see a lot more of this. People like Penta in Germany doing small business banking on Solaris' rails. So then the question is, what mark is all that making? So you've got a huge, diverse ecosystem of challenges out there. And I think you've got to measure that by sort of two things. One is customer adoption, and you kind of look at the likes of Monzo with 500,000 customers, Revolut with 1.5 million customers. You look at Klarna in Northern Europe in e-commerce, got 10% now market share of e-commerce and 60 million end users. Or ourselves as TSB, we've lent 10 billion pounds in mortgage lending in the last 3 years. So there is, I think, real impact there across that range of challenges from a people actually using it. But I think it's also a question of beachheads for a lot of companies where they are looking to really get in, say Revolut with a prepaid card and FX, and then build out a much fuller range of services thereafter. So some of the impact is very much still to come. And I guess you can also measure impact in terms of the incumbent banks, be it in Europe, be it in the US, and imitation is clearly the greatest form of flattery. And you see quite a lot of investment now, particularly in mobile apps, from the big incumbents trying to copy a lot of the features that the challengers are coming up with. So I do think there is a pretty huge range of impact now coming from the challengers, at least in Europe. So I did have a quick look at a survey from Sibos Money 2020 in preparation for this, and top 50 digital-only banks in the world. There was 22 from China and Asia and Africa to back up the comment made just before the break. There was 23 from Europe, and there was only 5 from North America, so you guys got some work to do.
Thank you very much, Richard. So to answer that question, we're going to send it over to Zach in the US.
So when I think about impact, I don't think about usage. I think about impact in terms of how you help your customer. So when we look at these challenger banks, especially in Europe, how many of the underbanked are now banking? How many people who weren't saving for retirement are now saving and investing for retirement? And how many customers have these challenger banks actually helped pay down and get out of debt? And so that's how I define impact. And so using that lens, I have seen largely a failure of challenger banks and other institutions that have meaningful impact on a lot of challenges of general consumers. And so when I think about the impact that they have had, it has changed the conversation. So I love that we're having a conversation more focused on the customer, more focused on how we use technology to serve customers. And that has created, I think, a fire in the belly, not just in some of the demographics of challenger banks that you articulated, but also in ones that are larger banks, like Goldman Sachs, our friend Bo from Marcus. And in some ways, when I think of the firm I work for, USAA, in many ways, we've been a challenger bank since we founded, and I'd like to share some of those principles. One, we were customer-centric before customer-centric was cool and became a tagline to sell something like an AI-based chatbot. For 3 decades, we were a virtual bank with no branches. Our customers could not come see us. And so along the way, we used technology. We invented something called remote deposit capture, which enabled you to take a picture of a check and deposit it because we trusted our members enough that they wouldn't cheat us. And guess what? They didn't, because they trust us. And so when I look at a challenger, we are a challenger in terms of how we approach serving our customers. And I would just offer back out to all those folks who call themselves challengers, what impact are you having on consumers? And are you just saying, I'm consumer friendly and using technology, Or are you actually doing that?
So if you like what you heard and you think that one side has the edge there, please do remember to head over to Twitter to vote. And whilst you're doing that, I'm going to hand it over to Simon Taylor, who's going to deliver the EU's rebuttal.
You know, I absolutely love that Sam wants to talk right now. That's making my whole world. Sam, I can feel you really, really wanting to talk. I'm just going to remind the world that Sam wants to talk. And if you want to vote for Europe about the fact that I'm mocking Sam that he wants to talk, go right ahead. It's right there on the screen how you vote for Europe to win. So what are challenger banks doing? Well, I don't know if you've heard of Pocket or Monese, but actually they serve migrant workers who couldn't get bank accounts. And the problem with not being able to have a bank account when you migrate into a country is then you can't get a mobile phone contract, which often means you can't get a place to rent, which often means you can't get a mortgage or anything else that you need that's the basic essentials of living. So what are they doing? They're making real differences to people's lives. They are having customer impact, and I do think they're serving underserved segments. I also think a lot of the challenger banks are competing on service because they don't have a high legacy cost. They don't have to pay for infrastructure and hundreds of thousands of people. They can actually have a different business model, and that's really powerful and expresses it in interesting ways. Rather than it being like a bad landlord, right? Rather than it being, I'm going to charge you and here's a fee and we're going to make money off your FX and we're going to hide all of these fees from you, which a lot of the incumbent banks still do, then challenger banks could be really transparent because they're making money because they have a low cost base. There's more space for headroom. There's more space for revenue and profit with a lower cost of operating. So they're also making a difference in terms of I didn't get surprised by the fact that I got charged. And they can do something else because they've got modern infrastructure. They can be real-time, intelligent, and contextual. What do I mean by that? Well, a lot of banks don't know until the day after that money left my bank account and I may have gone overdrawn and I may have had a hidden fee. In fact, Simon Van Scolina talked to that. Now imagine the impact to somebody's life of that. Imagine if that means I've not only have I gone overdrawn, but I've got a relationship where I'm living day to day and there's too much month left at the end of the money. Now I find myself in a position where maybe I can't make rent, maybe I'm having bad life consequences, maybe I'm suffering from poor mental health as a result of not knowing where I am just because my bank has bad technology. And you'd be surprised how common that is. 2 out of 6 people in the UK right now are suffering some form of concern about money. They're really dealing with mental anguish from concern about money. So being proactive, being real-time, being intelligent and contextual really makes a difference for customers, and that's what challengers are doing that old-fashioned banks can't do.
Woo! Oh, yeah! Thank you very much, Simon. So we're going to go back to Dan for the US's rebuttal.
Simon. Oh, Simon, I love you. All right, so for Team USA, real quick, a good point that was raised by the first comment about only 5 US companies when we're talking about challengers in tech. But unfortunately, those 5 would be like Amazon, Facebook, Google, Walmart, Apple. Netflix. Take a pick.
So I'm going to harp on a slightly different way of looking at it in terms of the size of the impact that challenger banks have, not within their own customers, but across the entire service space. So when Elon Musk founded Tesla, he very clearly said the purpose of this is not actually to make a very valuable company. It is to accelerate the rate at which we adopt electric vehicles and to get the technology rolling very quickly. Big example of that is that he made the patents for all of his technology public. You can actually use Elon Musk's patent to build your own electric cars. And that's why we see a lot of the big companies, Ford, GM, et cetera, building electric cars using those patents. I've been with Betterment for 5 years now. When I joined, we were the only person doing this in our space. We were the only online advisor who was able to do it. Over that period of time, not only has every large bank entered into it to try and offer a robo-advisor, they've done it while bringing their own costs down, while cannibalizing their own revenue streams. Generally speaking, an innovator or an entrant who decides that they want to serve customers directly by doing the right thing, by lowering cost, increasing efficiency, or providing a higher quality of service, has dramatic impact because they raise the standards that everybody else has to live by. If a startup that's VC-backed can do this, why can't some of the largest banks with the biggest balance sheets in the country do it? Anybody else?
Thank you for the team response there. That was a two-party approach. So to give us a little bit of a wrap-up on that round, we now have Elias.
Sam, first, come on, you don't need to steal the space to try to put your hat in front. Show us your socks, I think it's much better for you. So, what do challenging banks do? They challenge banks. Let's look at all the banks that we have in Europe that are in the million of customers, 500,000, 1 million. Monzo, N26, Klarna is way beyond, Starling banks, and so on and so forth. TransferWise, are all these banks, or these challenging banks, are making banks easier, are making banks more engaging, are creating the right experience. Clearly, traditional banks, the study in Europe, in France, that had shown that Bain & Company had shown that French banks have not got new customers since 2015. It doesn't mean there's no customers who are not going to traditional banks. They are going somewhere. These guys are banking. If you look also what's happening in France, you have Compte Nickel, who's now opening bank account outside of a bank. It's banks everywhere, but not in a branch. All that is about the challenging bank.
Great, thank you everyone. And now we're going to go back over to Jill, who's going to take us into round 7.
Okay, first we must do a little business here. Round 5, so the first hour of our debate, has now been decided. Round 5 goes to Europe. So they won 3 rounds. The Americas won 2 rounds. Got some business to do here, gang. Remember, you can vote via Twitter. Just follow the directions on your screen and weigh in at hashtag WFTR18. We are now into round 7. FinTech firms, obviously the big disruptors. And in the Capgemini LinkedIn FinTech report, these firms actually say their agility and ability to provide enhanced customer experience are their key competitive advantages. So our question for round 7, how can traditional financial institutions accelerate and improve their engagement with startups so that they can tap into these advantages? For the U.S. opening position, Jeff, take it away.
Thanks, Jill. So I think the first question, and the mistake that I think often firms of all sizes make, is they sort of view the technology as pixie dust, and that somehow if they sprinkle it on their organization, that this wonderful thing will occur. And you can't get away from understanding what is your strategy, what's your competitive advantage, and how do you use technology to enable that. So at a small company like Morgan Stanley, we think that our core value proposition is our human financial advisors. And by the way, I can actually tell you through all of our data and analysis that people still like to communicate with people. And so the question doesn't become how do we use technology to replace that value proposition? The question becomes how do we use technology to augment that relationship and really driving insights and scale so that human being can have more human conversations. And I will tell you that I'm the chief analytics officer. We use random forest equations to drive really innovative things. But I can tell you the single most powerful thing that a financial advisor can do today is take someone to lunch or pick up the phone and call a client. And then you enable that relationship with technology. The second thing I'd say is that you have to know what you can outsource and what you can't outsource. You cannot outsource your data management issues. You cannot outsource sort of defining what your value proposition is. And what we see time and time again in talking to my peers is people really try to overcome those problems and try to hand that off to somebody else. Nobody can define your strategy. And then the last thing I'll say is you need an infrastructure to really engage the velocity, with velocity around this. So we were out in Silicon Valley 6 months ago. I met with 30 machine learning-based organizations that are trying to really try to move the needle in this space. And after you talk to 30 companies, you get a really good sense. And really understanding how you can vet those opportunities. And ultimately, because you can hear everyone saying, well, I'll talk a good game, the only way you really know who's real and who's not is you got to test. And that means you've got to invest dollars of your organizational money to actually vet and determine whether these technologies are real or whether they're just vapor.
Thank you very much, Jeff. And now for the opening EU position, we are going to Claire.
So the first point is really have a purpose when you engage the startups. And for us, it was about partnering with Startupbootcamp FinTech, and Nectarios is going to do a rebuttal here. And over the last 3 years, we created around 30 companies that have an average revenue of 2.2 million. One of them is called Wyope, and when they started in the accelerator, they were very early stage, way too early stage to engage a bank like Lloyds Banking Group. But you know what? We had coffee suppliers all around the country, and they were a way to pay at your fingertips and order your coffee, and then you just pick up the coffee by beating the queue. They've been running in our coffee operation for like 2 years, and 2 years after, they've been approached by our main business as, oh, by the way, do you want to form part of our offering? And today they are part of the offering of Lloyds Banking Group. So the story goes, by doing something that was quite disinterested at the beginning to just help a startup to progress and to just make the fintech ecosystem flourishing in the UK, to beef up and to finally be part of the ecosystem of Lloyds Banking Group. The second part is really think big. One of the things we did as well was launching our fintech mentoring activities, which is like we pledge 100 of our top senior MDs in Lloyds Banking Group, and we match them with startup. It's quite inorganic. We don't really have a purpose when we do that. We just hope this business grow and flourish because we just see this as an interest for the country about growing talent, about delivering it. So I think my main message is really think around the purpose when you do this engagement, and follow a bit like your heart when you do that, and not just the economic reality about it. But let's elevate the debate a little bit, because I think we're talking about startups and this nimble startup, and surely Incumbents as startup have things to share about the culture, about our ways of working, and about the expertise banks have in terms of regulation and customer experience. But I think one of the environments we don't talk about is the BAFAs and the GATS. So how do we engage this technology company that are currently serving the customer? And I was in China recently, and I really think there is something that we need to tap into it. And I will expand that and say, like, the party just get bigger. Why are we just talking about fintech and incumbent? Why are we not talking about every part of the chain that is there? Why are we not talking about the government, about the regulator, about the fintech, about the startup, about the VCs? And this is what we've done in the UK by putting them all together around the table, around the UK fintech panel, and say, okay, guys.
Okay, that is a lot to swallow for the opening positions. If you would like to vote, just follow the instructions at the bottom of the screen. Hop onto Twitter. Vote for either the Americans or the Europeans, or you can wait for the rebuttals. Delivering our rebuttal for the Americas is Jane.
So I'm very fortunate to represent the voice of the founder. And I know there's a bunch of founders in the room. And often these conversations about how do fintechs collaborate with financial institutions, it's 90% financial institution and 10% fintech. And guess what? Like, it's not a big secret, but for founders and for fintechs, time is money. When you have a 2-year buying cycle, that's not good for me. It's really, really not. And so I was very heartened to see the Capgemini announcement today about the certification program. So less so startups, more so scale-ups being certified around, are they real businesses? Are they ready to engage? All of this is awesome. What I would love to see is a similar process on the other side. And Capgemini, you can give me some rev share for this idea because it's really good. Is your institution actually ready to engage? And like the questions at the C-suite are answered very easily. Once you get into the weeds of the operators, it gets very messy. So, is there room in the roadmap for this? Can be answered by everybody. And generally the answer is no, but it's something we're interested in next year. Guess what? Doesn't really help me because next year can come around and then it gets pushed to the next year. Is there money for Jane? Like, that's kind of important. Again, the answer is often no, but it's a huge priority for us. It's like, okay, so where is this really? The third really big thing is, what is your process? And often you focus on the pointy end of the process for startups. It's the innovation teams. It's maybe product, maybe C-suite, maybe customer experience. Our time is actually spent with your risk, compliance, marketing, legal, PR teams, and that can take, 3 weeks to get a meeting set up. And so be really aware of how long things take, because if just to get to the MOU takes 6 months, 9 months, maybe a year, then you can assume it's going to take a whole lot longer after that. So in order to accelerate, have a process that can actually get you in there faster. And there's another whole big thing, again, taking it out of scale-ups and back to startups. I think it's clear from the data that the venture world funds the hopes and dreams of 28-year-old white men, right? So if you're putting women and people of color through the same process as you put the startups that raised 100 million in venture, then you can take your, we really care about diversity, and you know where you can put it, because the money needs to follow. Thank you.
Woo! Time's up. Okay, thank you very much. That was brilliant. For the European rebuttal, Nectarius.
Damn you, Jane. You're taking away all my arguments. Let's start with a different question. I'm looking at all of you who are watching this and have an innovation role in a bank, who talk about all the appetite that you have about working with fintechs because it's cool, and you've got labs and garages and bean bags and Post-its. If I bring the best startup in the world that solves a real problem to you and they're enterprise ready, they've proven the technology, they've got customers, and I put them in front of you and say, go, what are you going to do? How long is it going to take? How long are you going to excite the right people? Are you going to make the money available? And all the things that Jane talked about. Because you're absolutely rubbish at doing this. And let's not kid anybody. Reality is that most startup engagements with the large organizations frizzle out because of the inability of the industry to engage. Nothing to do with the startups. They're keen, they want to learn, they want to talk. None of the founders we talk to want to bypass the industry or bypass regulation. They want to have a fair chance in this. But reality is that despite all the appetite, despite all the noise, all the conferences, all the panel conversations, all the cool tapping on each other's shoulders, talking about how amazingly innovative we are. Oh, we're a technology company with a banking license. Rubbish. Reality is you're not ready. You have no appetite. Sorry, you have no capability beyond the appetite. And you don't sit down and think, what is it that we need to build to actually get to that point? How do we bridge that huge chasm between appetite and capability? And there's lots of things you can do. And there's a lot of organizations who are trying, and nobody has figured it out, but at least people try. But there's a lot of people now who go, you know what? And we're talking heads of innovation who say, you know what? Don't tell me what I'm doing is wrong. I've sold my strategy to the board. I'm not touching this now. Seriously, 2018, FinTech, is this your strategy? How do you measure success? How do you actually figure out what works and what doesn't work? How do you get the business excited enough to actually put money towards it? Because the innovation budget is actually shrinking. So all these things nobody's addressing. So all this talk about collaboration is noise because nobody's actually doing something about it. I'm sorry, that's it. I have 24 seconds left, but I've got nothing else to say.
Oh, thank you very much. Okay, Shankar, one of our co-captains here in the Americas. How about a quick summary?
Thank you. That was a pretty interesting conversation. So I think that one cannot do without the other. I think the future is all about how do we have a hybrid model. You can have a smart idea, two guys in a garage, no customers and no data, screw you, you're worth nothing. So you need the banks to take their customers and data and make something out of it. And also I've heard these banks are departing forever. Actually, when I saw this morning, they're better capitalized and stronger than 2 decades ago. And the spider is actually tracking well compared to tech stocks, which are actually tracking the other way. So I think that everybody's right and everybody's wrong. I think the two of us have to come together and kind of, and I agree the point that with a lot of banks, it takes time to bring in the startup, but that's because what happens if the startup is out of business? Who's going to bail the bank out? So that's where the entire ecosystem needs to play ball and come together like never before, so that the smart ideas go to the bank, germinate quickly, faster.
Okay, thank you very much. All right, now, here in the Americas, we're gonna have the work to do, because we have our round 6 winner is Europe. Oh, it's very subdued here, a very sad face. There they are. I don't know what they're doing some sort of Olympics dance, I think. If you'd like to vote, head to Twitter, follow the directions at the bottom of your screen. And now we're going to go over to Sarah, who will introduce round 8.
Thank you very much, Jill. And excellent work, Team Europe. Let's see if we can keep going, keep that winning streak going. So we're going to move on to round 8 now. We all know that one of the most important elements for the success of any innovation project is a supportive culture. And that's even more key when multiple parties are involved. So our 8th question will dig into this subject matter. What role does talent and culture play in a successful FinTech incumbent collaboration? And to kick us off on this, we're going over to Claire.
So talent is critical. People are critical in this story. I think we've sorted out, since the beginning of this debate. And I think if you really take only one action out of all this debate, please go online and pledge for the FinTech parity, because one of the key issues we have in FinTech is really around our diversity. The recent report of McKinsey shows that companies that are diverse perform 21% better and 32% better if they are ethnicity diverse. It is a call to action. We cannot just stand still. If we want to match the customer base, if we want to engage our talents, if we want to serve the best service for the customer, we have to become diverse. We have to bring these different talents. I've led innovation team for 4.5 years, and I remember Sam interviewing me one day and say, "Hey Claire, did you realize your team is coming from all across the world?" And I was like, I didn't really realize that, or I didn't do it intentionally. We just went to hunt the best talent to make it happen. And they were coming from everywhere in the world, Australia, America, like Poland, Africa. They were all coming together to build these best services. Talent is key. The second thing is culture. We've been talking about it, disrupting the old ways of working. We've been talking about bureaucracy. We've been talking about what are the challenges in this startup incumbent engagement? How do you do that? How do you become nimble? How do you take the leap of faith for organizations that are very hierarchically wired and start to be a connected organization? How do you drive different type of thinking, what we call the double loop thinking, and you don't get stuck in the simple loop thinking? How do you don't just go after incremental, but you actually motivate your people to achieve the best outcome for the customer and to come with the best solution? And how do you enable your organization to do that through and through? It is a tough challenge. There is no silver bullet about it. I've been asked for the last 5 years, what is a magic recipe? There is none of it. You will have to put all your effort in order to do that. We've built academies, we've built culture and transformation programs. We just have to keep pushing all together to make it better.
Thank you very much, Claire. Now we're going to go over to Zach in the US for their opening position.
So I completely agree with Claire, although I would look at the need for talent and diversity as really part of culture and what you champion. Because I'm a firm believer that the culture of the firm will eat anything and everything around it. And if you do not have a healthy culture, it doesn't matter how many startups you bring in, how much you desire change, you won't be able to. And so as a leader in innovation, much of my job is around culture and leading change. And when I think about culture, it's about a sense of purpose. It's about a sense of being bigger than something than yourself. And I see that in some startups. It's hard at times to find in large incumbents. And I've been fortunate to find in the company I work for today. And so we ground ourselves back in our culture, which are mission and purpose. And so every morning I wake up and I don't think about technology. The first thoughts in my mind are around service and service to customer. And then secondarily, I look at how do we leverage technology in order to enable that. And that's where I find the opportunity talking to startups, candidly talking to large technology firms and other corporates. Their challenge in terms of their why, in terms of what they're doing. I get 100 emails a day from someone trying to sell me an AI-based chatbot, blockchain-based PFM app that will finally work. But what I've found is when I've paused and talked to founders who understand our why, who understand our purpose and have a connection back to the service that we provide to our customers, our members, that's where I find we could do very meaningful things. And that's actually where I find where we can break down all those interior barriers, because when you have a culture of your firm that is perfectly aligned against service and service to customer, it is amazing what you can break down, from legacy technology to legacy norms to old ways of thinking. But if your partner, your FinTech partner or other technology firms aren't aligned in your purpose, it will fail at some point. And so when I think of FinTech partnerships that have worked, it's where there's true alignment behind the why of the work that we're doing, and that's grounded back in the culture and the purpose of the firm that I work for. Thank you.
Thank you very much, Zach. So in summary there, we have that diversity is absolutely key, but so is ensuring a cultural synergy. Just to remind you that you can and should be voting, especially if you're voting for Team Europe. And whilst you're thinking about that, we're going to move over to Nectarius, who's going to give us the rebuttal from the EU team.
So why are people shy of actually talking about some of the other things? None of the shareholders in a bank care about innovation or culture change. Innovation is a tick box, and most people act on that. Because if you start really meaning what you want to do, you need to change incentives in the people to actually do innovation. And trust me, nobody in the business has real incentives to actually do something that will affect change. One thing. The other one is that we're in an industry, and I come from the industry, where research and development is not something we do. So innovation doesn't fit anywhere, because ultimately we're in an environment where we need to enable and establish a mindset of experimentation. Experimentation is not going to lead to ROI instantly, and we already have a problem there because people are only incentivized by cost savings or ROI. So structurally, the whole governance of a bank, and take pretty much any bank in the world, doesn't work. It's not built to actually encourage and effect culture change. The majority of the business that we do is working with large organizations. So we actually have relationships with about 250 blue chip companies around the world. So we talk to these people. We actually have got access to C-suite. And guess what? We have got one case where the CEO, the CFO, and the CTO signed off of an engagement. And then he got stuck in the permafrost of senior management who have absolutely no appetite. And guess what? When it comes to the 2% of whatever is part of the innovation remit and the kind of conflicts with other priorities, the first thing to fall off the table is change. So this is not going to work. It's not set up to work. So the companies that really mean it, they're also looking to change some of the very fundamentals where they increase the visibility of their activities and not just to tick a box. So for me, the big question is culture change is important, and culture is important, and we can do all these beautiful things that excite the population within the bank. But guess what? At some point, it gets stuck somewhere because you have no avenue to actually grow it. If you follow the big leaders on innovation who used to talk about technology and FinTech and all the other things, and nowadays they talk about organizational change, which is the only thing that can actually allow this industry to evolve. But at the moment, I'm very pessimistic. End of my contribution.
Thank you, Nectarius. Some fighting talk there, I think, perhaps. So now we're going to head over to Catherine in the US for her rebuttal.
Obviously, I approach this from a FinTech perspective, and talent seems really obvious to us. Yes, you have to have really smart, bright, talented people in order to make these relationships work with banks, and cultural alignment is really important. And from our perspective and in our experience, when the relationships work really well, it's because inside the bank, the initiative is being led from the top. So we saw Ralph Hammers earlier, I believe, during the break, talking about what's important to ING. We partner with ING, and we know for a fact that he's out there talking to people and getting people excited and engaging in the culture and creating a culture where people can take risks. But culture, I think many people think, is all about ping pong and beer. Like Nectario said earlier, I've been through many, many innovation labs at banks, and right in the middle is a ping pong table, and then they are excited to walk you over to the beer cooler where there's 4 bottles of beer, stuck in the cooler. But it's really not about that. It's really about innovation, I think, and risk-taking. And so what banks are attracted to with fintechs is our ability to innovate and to take risks, which we do because we adhere to some guiding principles. In our case, we actually walked away from a big bank partner because we were going to have to walk away from our guiding principles in order to make that relationship work, and it wasn't worth it to us. I think the second thing culturally that's really important about working with a large institution from a fintech's perspective is to have a culture of compliance. So I don't know if you all remember the Mother's Day massacre, which is a couple of years ago, and all the details of some of the issues around Lending Club came out. The problem with what happened there was that it impacted the entire fintech space, because suddenly, whether it was the capital markets or it was the bank partners or whether it was the investors, everybody was worried that suddenly fintechs didn't understand compliance. And I know that Clara mentioned earlier, as did Suresh, that compliance is a really important aspect. So the culture of compliance means that you understand how to approach compliance with a bank partner. There are 2 types of compliance. There's regulatory compliance and there's process compliance. Regulatory compliance is just something you have to do. Whether it's AML or KYC or whether it's disclosures to your customers, you just have to do it. Process compliance is really the problem. It's where there's a whole room full of people who say, oh, you have to check this box every time you do a thing. And if you don't check the box, then there's going to be trouble. Well, why do you have to check the box? Well, because some dude 70 years ago decided we had to check the box, and that's just why we do it. So it's really important culturally to push back against that type of process compliance to make sure that you can actually achieve everybody's objectives.
Thank you very much for that, Catherine. So, Elias, could you give us a quick summary of your thoughts on round 8?
Risk-taking, I think it's clearly the main message that we got across the last debate. So let me put that in a very simple way. What's MVP stands for? When you're a startup, it's the minimal viable product. When you're a bank, it's the maximal viable product. So when you start this way, it's very difficult to bring these two together. Startups need to be in the market, needs to run, need to test. Banks need to make sure that it will not fail. So this is where the culture starts, and the more we bring these two cultures together, the more we help them, we orchestrate this gathering, the more we'll get them together. Clearly, both sides need each other. Banks today need startups to innovate, innovates needs banks to scale. So bring them together is the way, and culture is what will bring them together to work together. Thank you.
Thank you, Elias. So now we're going to go back to my US counterpart for both the results of the round 7 vote and an intro into round 9.
Elias, I just want to let you know, for the aging athletes in this room, the only thing that MVP means is most valuable player. And so I just want to get that out there. Round 7, the winner is the Americas. Don't forget to go onto Twitter so you can vote. Use the hashtags at the bottom of your screen and weigh in on the conversation. Hashtag WFTR18. We are coming into round 9, 2 rounds remaining. This is exciting. Rapid change in technology challenges upstarts and established firms alike. Boundaries between companies and industries are becoming blurred. And so our question for round 9 is this. Who will be the long-term winner as banking evolves to a marketplace model? Incumbents, FinTechs, or Big Tech? And as a follow-up, as we consider Big Tech's strong relationship with consumers and efficiency in creating frictionless tech transactions, are Google, Apple, Facebook, Amazon, GAFA, a threat or a partner or enabler? Now, we just happen to have a Facebook pro, a woman who actually wrote a book about Facebook, on our panel and putting out the opening statement for the Americas, Clara Shai.
So again, as before, let's talk about digital only and digital advised. For digital only, I think the challenge for FinTech players is that they're going to have to get to scale really quickly in order to be able to matter and not be subsumed by a copycat incumbent. It's possible. You look at other industries like Uber and Lyft, they've raised massive amounts of money. And because those early years, the early decade is really about client acquisition and building your brand. So it is possible. I do think that also big techs have a big advantage. If you look at China, the 2 biggest FinTech players are WeChat and Alibaba. Started off as tech companies. The consumer relationship alone isn't enough. You actually have to have a consumer payment relationship in order to be able to grow as a FinTech. In both cases, they started off in the WeChat case with virtual goods, getting people's payment method through virtual goods. In the Alibaba case, very, very similar to Amazon, doing transactions for e-commerce. So for the big techs to win in America or in Europe, we'd have to make sure that you have the payment method. Now let's talk about digital advised for a moment. So digital advised, I think no one today would be really difficult for any upstart today to be able to raise the capital and justify building 5,000 branch locations, hiring 20,000 human advisors. And so I think here the incumbents will have a real advantage in terms of they already have that infrastructure in place. Their challenge will be getting to profitability and improving productivity as margin pressures continue to increase. And I think that it's possible, but we should expect to see over time industry consolidation. In general, for both digital only as well as digital advised, given the nature of technology, the economies of scale required to build a marketplace, two-sided marketplace, multi-sided marketplace, as well as the network effects inherent in anything technology, we'll start to see overall convergence because technology is generally winner takes all. That's why there's only Uber and Lyft. Very few number of players in that space. That's why there's only Amazon, Facebook. There's only one Amazon, one Facebook, one Google. We should expect to see the same thing in financial services. Thank you.
Okay, and for the Europeans' opening position, we are going to Richard.
Great, so let me talk first of all from the bank perspective. So a lot of people would say marketplace is not a new thing. Banks have sold add-ons like insurance or small business software for decades. That's kind of true, but it's sort of totally missing the point. Today, you can create so much better customer experience via fully integrated, frictionless processes to bring much wider services contextually to a customer. And I think there's also something about mindset here for a bank. You've got to be prepared to offer customers choice. And that choice is not just on add-on stuff you don't do yourself as a bank. It is about choice in the products you do yourself. Let's talk about Amazon for a second. Amazon does this with Amazon Marketplace. Amazon has its own products on Amazon and it offers third-party products. And it provides you an easy comparison of the two. And that provides better customer experience, provides customer trust, and it also provides great data for Amazon to improve their own product set. But actually, this isn't really that much about banks, this question. The question is about really, is GAFA going to take over financial services? And I guess, to my mind, the question is just wrong. We've talked about China a fair bit. We should kind of talk about China a lot more, because this is not about Google, Amazon, Facebook. This is about Baidu, Alibaba, Tencent. I've been to China a couple of times in the last year, and you go to Hangzhou with Alibaba, or you go to Shenzhen with Tencent, and you kind of see the future. Tencent has a super app via WeChat that includes payments. You can book a doctor, you can invest in a fund, you can book a restaurant, you can split a bill, you can order that restaurant, you can go on and on. The range of jobs to be done is astonishing. You can do through this one app. So I guess you kind of look at Facebook, 95% of the revenue comes from advertising off social media. It's a great social media site. But Tencent, it's only 25% comes from advertising. 75% it's a much wider range of services. So I guess from my point of view, you've really got to look east for the future, not west. And I, for one, welcome our Alipay masters.
All right, well said. They're really interesting to bring this up. I think that many of us feel like those big names are taking over the world. It's nice to know there are other large names that will be taking over the world instead. All right, maybe it's not that nice. Remember, you can vote right now. Go to Twitter. Use the hashtags at the bottom of your screen. And now let's get to our rebuttal for the Americas. We've got Bo, who will be speaking first.
So this is actually one of my favorite questions. I can remember sitting in London a couple years ago, and the question was, well, isn't Apple, Amazon, Facebook, and Google and others going to disenfranchise or disintermediate the banks from their customers? And it was actually a really, really intense and robust debate in that time. And in the room, I actually kind of started chuckling because I thought to myself, that's actually incorrect. Everybody wants to create this battlefield of the incumbent banks, the fintechs, and the large tech companies. And I think that's actually very wrong. And if we talk about the roadmap, let's talk about the roadmap. So the legacy banks, you want to talk about stickiness in customers? That's the legacy banks, right? I mean, I salute all the fintechs around the world, big supporters, but the population uses the legacy banks to do the banking. Now, innovation, right? So you have scale on the legacy side, but innovation comes from the fintechs. And I, for one, am excited and actually very supportive of the fact that fintechs took the courage and creation to jump out there into the market and actually be R&D and actually create great customer experiences. And that, to me, is not an adversarial relationship, because I remember several years ago, it was the fintechs are going to eat all the big banks. We have scale. We have the funds. The fintechs have the innovation. It's a partnership. And when I came to Marcus by Goldman Sachs, that's actually my first step, was how do I actually bring together not only the people who understood regulation and compliance for banks, because you need that, regardless of what anybody would like to think, and you need the innovation of the fintechs. And that together creates a marriage of how you put customers first and you bring them the best functionality as you move forward. Then let's bring in the big players, Facebook, Google, Amazon. I'd even throw Microsoft in that as well, right? They own incredible customer experience. They own it, and people flock to use their services because they provide their services for free. All of them have attempted to become banks, and they've all backed away from it. Why? It's hard. And there's a reason why it's hard. It's because it's very important, and you have to be responsible and focused on that. And to me, that actually is an opportunity for partnership. So I don't think that there's this adversarial, dog-eat-dog battle that's going on. I actually think it's massively convergent. These big players want to go a little bit deeper, as a colleague in Europe has said, deeper in the relationship and deeper in the experience. As Claire was pointing out, technology will eat the world, right? And folks are moving to that. You can see it in Africa and other places as well. And to me, the roadmap ends where these three converge and we actually create an incredible new platform.
Oh, we just made it right under the bell. Okay, let's go over to Europe where Jamie will deliver the rebuttal.
Well, let me tell you about that incredible new platform. So 2.5 years ago, we started Bud because we noticed one big thing, which was FinTech was on the rise. And people were getting better experiences in each of these new product verticals. You had TransferWise making remittance much better and a much better experience and for better rates. You had Nutmegs and other robo-advisors who were making investment easier for customers. And across the board, you had all these new companies who were developing these new products and services in their own individual vertical. But customers don't really want to go and get another app for one thing and multiple different apps for all these different services. The mass customer is used to going to one place for all of their financial services, their bank. So Bud was created as a way of combining all of these new product innovations across the FinTech space, integrating those services into our platform, and making that platform available to banks so that they can distribute these new amazing products to their customers. I think when you look at something like this model, which we call marketplace banking here in the UK, really, it's Europe and UK who are pioneering these new methodologies and getting these new products to market in a new way. You have challenger banks like Monzo and N26 who have already kind of put their flag in the ground saying that they're going to be doing marketplace models. And really it's borrowing from the experience of the likes of Amazon and even travel companies like Expedia. Look at the way that they revolutionized those markets by bringing all of these services together in a new way, making customers incredibly aware of all the services that were available to them, giving them choice. And that choice gives them power and it gives them information that they can take and inform their lives and have better experiences at the outcome. I think when you really look at the heart of who is going to kind of swoop into financial services and take the crown, really I don't think you can look at the Facebooks and the Amazons, because when you look deep down in these companies, where do they keep their money? In a bank. It's not going to change. And I think by partnering with platform companies such as ourselves, banks will start to have a new ticket to the game, which will allow them to be innovative, will allow them to be agile and serve their customers in a brand new way.
Okay, they keep their money in a bank, usually an offshore one, at least for the time being. Okay, Sam, how about articulating a little recap for us?
So the question is, who will be the long-term winner as banking evolves to marketplace models, incumbents, fintechs, or big techs? I don't care. The customer. I mean, seriously, the customer. Everybody's going to win. But at the end of the day, the customer should win. We're seeing this in China, right? A whole a group actually now being raised up, right? Their middle class emerging. We've seen this in Africa with M-Pesa. That's what these solutions need to do. Nectorious talked about it. I think Simon hit on it. Jamie evidently didn't get product for his hair today. It's the smallest I've ever seen his hair. But that's who needs to win at the end of the day, providing these services to the masses.
Thank you very much. Okay, we have a very curious event here. We have the round 8 coming in at a tie, which means we'll have to go to a shootout. No, just kidding. All right, so no shootout. We will enter now into our final round. Remember, if you'd like to vote right now, you can do so. Just follow the instructions at the bottom of your screen. Go to Twitter. Figure out whether it's the Americas or Europe. Final round, Sarah, take us to the end.
Well, this is getting exciting. It sounds like everything is left to play for on both sides. So let's get into our grand finale. Today's final question pits the Europeans and the North Americans against each other once more. We all know that regulation is integral to the financial service industry's development and indeed its evolution. But which approach is more effective? A European-style top-down regulatory approach or a US-style market-driven one? So we're going to start with Jamie. Over to you for the European team's opening position.
So regulation, it is the rules that everyone in this industry has to play by. And I think when you look at things like sports, rules are there to kind of stop it all disintegrating into absolute chaos. But what regulation also does is it creates high walls around this kind of sacred garden that is financial services. So when you look at the European model and what they've tried to do with the likes of kind of open banking and regulatory sandbox initiatives, what they're doing is they're lowering these walls for entrance into this market. And that has spurred on a wave of competition and a wave of innovation that I think is pretty unprecedented when you look around the world. So I'm going to talk first about the sandbox initiative from the FCA. Bud was involved in the first cohort of the FCA sandbox. We're also involved in the third cohort of the FCA sandbox. And really that's a way for people to safely trial new initiatives with a closed group of consumers for a set period of time against a set hypothesis. That is a way for not only us as a startup to learn, but also the regulator to learn about our business and how that is going to affect the market. A crucial piece of the puzzle that needs to happen, otherwise that kind of initiative falls on its knees. And then secondly, open banking and PSD2 breaking down the walls around banking data so that customers can take that data and use it and have it analyzed in any way that they choose. That's one of the key parts about, that's going to introduce new competition in this market. And that also touches on payments as well, breaking down the walls of large payments companies so that, a customer can initiate a bank-to-bank transfer from wherever they choose, pending them being regulated. I think this kind of innovative playing field that the regulation and the regulatory environment of Europe has set out is absolutely the right way to go, because it's the rules that everyone plays by. And without that, you get into some real sticky situations. Looking at other markets where there should have been regulation, just look at the US, just look at the US aviation department. Look at the four big players there and the lack of regulation, what that led to. Hopefully we won't have any customers being dragged out of bank branches by their feet in any time in the EU.
Some fighting talk there to finish on. Thank you very much, Jamie. So, Catherine, over to you for the US's opening position.
I do hope that our voters don't confuse what I'm about to say with a vote for Team Europe. But it seems pretty hard to argue that the US market-based regulatory regime is as effective as the European-based model. So I'm not here to argue on behalf of the Americans, but I am here to suggest that the reason that that model works is because it really involves a very strong focus on the customer experience and on customer rights, customer ownership of data, and that's very, very important. I think the difference is in the US, regulators and policymakers and lawmakers believe that the customer is the business, is the financial institution, is the bank, whereas the European model assumes that the customer is actually the consumer. And that's a really important distinction. I spend a lot of time in DC, and I spent some time talking with someone, a policymaker, about FCRA, the Fair Credit Reporting Act, which is really archaic and arcane and has been revised a couple of times, but doesn't take into account any of the new data and tools and technology that could be brought to bear for the lending process and for making a credit evaluation. For example, social data that could be used to help provide more access to capital, more access to credit for the underserved and the underbanked and the new to the market. So I think that's the difference between a principles-based regulatory regime, which is what Simon mentioned earlier, and the market-driven model. So the market-driven model in the US also hasn't driven any advancements on the regulatory framework for non-bank financial institutions. So appropriate regulation is really important. We make loans to small businesses. I don't transfer money. I don't take deposits. I don't make investments for my customers. So it's really important that we figure out how to regulate appropriately for exactly what a company is doing and not burden them with a bunch of cumbersome regulations that aren't even applicable. And I think that's what's been slowing us down. So again, I think it's really important to embrace the model that the Europeans have taken with PSD2 and GDPR, focusing on the customer experience, focusing on their access to data, and realizing that they're really the ones who are driving the market.
Thank you very much, Catherine, and to Jamie as well. So it looks like we have a vote of confidence for the European regulatory system, which may make the rebuttals slightly easier. Before we get to that, I just want to remind the audience that time is running out to vote, so please head over to Twitter and make sure you do that. Simon, would you like to give a rebuttal? I feel like you have a relatively easy starting point there.
So since we've already agreed that the European system of regulation is preferable to an open market, I'll add a few things. I think regulation can not just regulate markets, but it can create new markets. The Open Banking Initiative here was driven by PSD2, a piece of legislation that applies to all banks. But the Competition and Markets Authority here in the UK decided to really get ahead of that and make the largest 9 banks sort of do all of the work up front. They made them basically create APIs or conform to an API standard before they were even required to. And that wasn't to sort of like suppress competition. It wasn't to limit the free market. It was to basically make all of the customers' data available to the customers. It was to sort of raise the amount of customer data that was available so that fintech companies like Bud and others that want to build things on top of that data could have the assurance that that data was going to be there, right? So the point of that regulation was not to control a free market, it was to create a new market. And the other thing I would say about especially London is in the US you have all of the tech in San Francisco and all the regulators in DC and all of the money in New York. It's 1,400 meters from Silicon Roundabout, which is the spiritual center of tech in the UK, to the Bank of England. That's about 0.9 miles. So beat that.
Thank you very much, Simon. And so we are heading back to Jeff for the final rebuttal of today's event.
So I think what happens in the regulatory world is an interesting conversation, but candidly, most of us in this room have absolutely zero impact on what the regulators do or don't do. So I think the more interesting question is, how do you use both the regulatory regimes that are out there and how do you use sort of this free market approach to actually get people excited? And the truth is, neither actually get people excited. For the average financial advisor, they don't even know who the OCC is or the SEC, and they just see that as sort of a way that gets in the way of them doing business. And also, if you try to sell these things as this big innovation play, most people don't care about that either. I mean, the people on this call, on this webcast, probably are innovation focused and we're like, we need to innovate, we innovate. Nobody cares about that either. And I would just go back to really a theme that I think has sort of played out here through the whole conversation, is going back to what the client wants, knowing what your competitive advantages as an organization to drive that and solve real problems, right? I guess I'm going to bookend this by saying all of this is interesting unless it speeds a client experience, drives a better investment outcome for a client, creates alpha. If you are not doing those things, you are failing. And by the way, sometimes you do those things, it has nothing to do with technology. It may have to do with business processes. It may have to do with better training of your employees. It may be communicating your goals and objectives more clearly. And I guess I would end by saying, let's not forget that those things still matter. Leadership still matters. Cooperation still matters. And for all the conversation about FinTech, I still believe that our success and failure rest on those fundamental capabilities.
Thank you very much, Jeff. And now over to Simon, the other Simon, for our final summary of the day.
So I think it's interesting that we've got to remember the fundamentals. We've got to remember to serve customers. But what I think is interesting about the principles-based regulation approach that both of these gentlemen mentioned is that it does serve customers. It is in their interests, and I think it really matters that people who were underserved and that couldn't get bank accounts before can now get bank accounts because fintech companies are encouraged to do things. And I think the principles-based regulation has allowed for that. And I think we all in this room and everybody listening can make a difference. I don't think it's as hopeless as we can't make a difference. We absolutely can. And we can make a difference, as these gentlemen said, by going into the sandboxes. And now the OCC and the CFTC and the USA have sandboxes. Go speak to your regulator people. They're not that scary. I think this is an exciting time for fintech innovation.
Thank you very much, Simon. So now over to Jill for the final results.
Round 9 winner is Europe, which means because of our tie, Europe is ahead 5-3, making it mathematically impossible for the U.S. to win at this point. That said, this has been an amazingly illuminating day for all of us. I love talking about the overhyped and underwhelmed areas like identity management systems and blockchain. I love the idea of how we can use our data and provide insights to enhance the customer journey. I like the idea that banks have to show that they love us. Please print t-shirts immediately. And also, how we need to rethink not just our systems, but our approaches to many of these problems. I think we've all sort of agreed that blockchain's not quite there yet, but maybe there's something there, unless it is a bet against humanity. That would be a little scary. Where is the customer service being delivered? I think it's Europe, US, China, Africa, fintechs, established institutions, startups, maybe even those big tech companies. I do believe, as someone who comes from the financial services industry, that our ability to use technology to enhance customer relationships is really going to be the critical issue. I like the sense of the collaboration between the established firms and fintechs really will rely on a diversity of talent, of diversity of thought, geographic diversity, and that your culture is not just words at the top, but filters through your entire organization. As we kind of look ahead, that conversation around big tech and looking east versus west really opened my eyes in many ways. Regulation is always a little bit of a ginger topic for any of us. I've always been much more impressed by the rules-based versus the principles-based. But specifically, the customer is clearly in the limelight here. And maybe customers, at least here in the US, are going to have to take charge a little bit more and demand more of our regulators. I know that you guys know this here in this room, but right now we have a regulatory regime that is being dismantled. And I'll just put a plug into my friends over at the Consumer Financial Protection Bureau who are being defunded right now at the expense of customers and consumers around the United States. So with that said, do my friends in Sunnyvale have a winner for me for round number 10? Okay, gang. Europe has won round number 10. If you're keeping score, Europe, you just won 6-3. Look at them doing some sort of wave, some odd kind of characterization there of a wave. Before we go, I do want to thank a bunch of people who made this possible. First of all, the folks here at LinkedIn and at Capgemini and 11FS have put on an amazing event. Jennifer Grazel's team at LinkedIn, Jan, Chris, Caspian, amazing. Capgemini, Bill, the team with Chirag, Aaron, Ken, 11FS, Sam, Simon, Ollie. I would be remiss if I did not shout out our technology team here in New York. We've got Dan leading the way, David, Sean, Paul, Tim, Tommy, David, Brian, our cameraman, Ed, Jeff, Ramon. And in Sunnyvale and in London, Ramiro, Gary, Joshua, Tersh. Whew, okay. To close out this day, I am pleased to introduce to you Bill Sullivan, head honcho is what I like to call him. He goes by Head of Financial Services Market Intelligence, Senior Director at Capgemini. Bill.
Great. Thanks a lot, Jill, and thanks everyone for tuning in today. We really set out to have a different conversation in a different format. I think we did a phenomenal job. Jill, Sarah, absolute rock stars in managing this. We put a lot on you, and you far over-delivered on what we ever thought could be possible. The debate captains on the US side and the European side, you guys did a great job. And thank you for all the debate participants. I know you took a big gamble on this format in terms of what we threw out there and what we were planning on doing. I hope you enjoyed it. I think it was a lot of fun.
Please go back and watch the conversation. I think there's a lot of relevant things happening. We covered a lot of great themes. You can go to the www.fintechworldreport.com, download the report that we just launched. We covered all of the themes that we discussed in the debate today. We've got some great Agents of Change videos that we've done, which also have some senior leaders from FinTechs, from Incumbents, that also are covering these themes. So I think we're in an and Jennifer, certainly thanks for the partnership. It's been a phenomenal time. It's our second year. I think we able to jumped up the bar this year, and it was a lot of fun. So thanks everyone for joining, and have a great day.
All right.